Okay, everybody, welcome back to another edition of Market Talks with Dr. Stocks and coming to you from the live trading room on drstocks.com. That's drstoxx.com. And if you want to join a great group of traders of all different levels and hear me giving some training advice and chart reading analysis every afternoon, you go over to the subscribe menu, go down to live trading room. We also have a new live options room that's going strong as well. So let's take a look at some charts. We're going to start over on finviz.com, your one-stop shop for all things trading. We get 10-minute charts of each of the major indexes, the Dow Jones, the NASDAQ, the S&P, the Russell 2000, and you can see they're pretty much all doing the same thing. So we had a really big slide down on Friday. Markets were down over the week about 2%, close to 2% for the S&P, a little more than 2% for the Russell. And we started off slowly, pretty weak this morning. A lot of more selling pressure early on, and then right around 10:30, 10:45, we started to see some the volume dried up. Right, really dried up quickly. There was not a whole lot of selling pressure on a volume basis. It was just a lot of pricing pressure, and then we saw things stable out. Right, about 20, 30 minutes of flat trading. Then we printed that nice little reversal bar. You'll see it just before 11 o'clock right there on the NASDAQ, right there on the S&P. Here's a big bullish engulfing candle on the Russell, and that pretty much marked the end of the pullback. Now, I don't think we're done yet with this leg lower, which is pricing in tariffs and Doge and sticky inflation and a hawkish Fed and a slowing consumer, right? So those are the fears that are stirring up this selling pressure. Market's just doing its thing. It's really just more of the same trading range that we've been in. We're just happen to be now down toward the lower end of it rather than the high end of it. And it only took about a day and a half to get down there. So that's kind of the painful part. It happened so fast. But that's usually how the market is. It goes up very slowly and then boom, right back down, slowly back down again. And we just had the back down flush out. Everybody who was a new bull buying up at the top, sold down at the bottom, rinse and repeat, right? You don't want to be one of those traders. You want to just think of the opposite. When it gets up to resistance, you start to pair off, you start to take your profits, you start to tighten your stops. Wait until it gets back down to support. That's when you load up, load up, load up. Okay. So anyway, what was I going to show you here? So market internals. So market internals, not too bad. So they were negative breadth. Now we're looking at a slight positive on the breadth. We're still seeing way too many new lows down here in a market that's up near, the S&P, the NASDAQ, they're up kind of near all-time highs. And we're seeing far more 52-week lows among major stocks. These are big board stocks, right? So that's still not good. We really need to see that start to shift. It means that just a handful of stocks are pulling the market higher, and most stocks are really not that healthy. You can see the heat map over here. We've got quite a mix today. So even among sectors, you drill down into sectors and you're trying to find something that's just standard all green, and you can't because there's just a lot of mixture out there. Some sectors like, the farming and industrials and even some healthcare, which was off to a great start early, are showing also some signs of redness among key names. And you've got a real mixture among the big mags. So these are the big tech stocks, big blue chip tech stocks, biggest companies on the planet. And you've got Google and Apple and Oracle green, but you've got Microsoft, Avgo, Amazon, and Facebook red, Tesla and NVDA flat. So, right, those are, it's just a mixed day all around. But the good news is, let's go over to some charts. The good news is that we're starting to see a little bit of a fade of that pullback. Now, this is the 1 hour chart. And when we get into tough times like this, I do like to focus quite a bit on the 1 hour chart. It gives me a better sort of close read of the market. And if you're just looking at the daily chart, it can slip away from you as it did on Friday so quickly. And if you were looking at the hourly chart, you would have gotten an early warning signal that things were getting weak. And if you're just looking at the daily chart, by the time it is flashing weakness, it's a little too late. So focus on the daily chart for your swing trades, but the hourly chart to keep on top of major market turning points. And you can see here's the top right up here. This was back on the 19th of February. And if I can put on a the Elliott impulse wave indicator, here's your leg 1 down, your leg 2 relief rally, your leg 3 down, and 3 is always the biggest and strongest in terms of price momentum wave of the 5-wave sequence. Here's your wave 4 relief rally, which happened pretty much overnight. You couldn't really trade that. That was Sunday night, Monday morning, early Monday morning. And then here's the little wave we had down heading into the bell, after the bell, until about 11 o'clock when we hit the bottom. And now we're getting an ABC reflex wave back higher. Where's my ABC? Right there. So we're in the middle of this first wave higher. We're probably going to top out in a little bit. We'll get a little bit of a weak back and fill, and then maybe up into the blue zone for the C wave. And then I do think that the next move should be another 5-leg sequence lower. So I'm not an Elliott wave theorist. I could be totally wrong about this. And if we do get this little ABC correction, and if it does get all the way back up to the blue zone, you know what? You're going to have a nice little head and shoulders, inverted head and shoulders pattern forming right there. Maybe that's the bottom. But I do think because on the hourly chart, we hit the top and we did have a very clean looking 5-wave sequence down, chances are very likely that we're going to get an ABC reflex wave back up and then another 5-leg sequence back down. I don't think it's going to be as sharp as this one. It's probably going to come back and test some of the lows that go back to last year. Maybe something like a 100-period moving average or 150-period moving average. Don't think it's going to be too devastating, but maybe we get a 5%, 6% correction overall by the time all is said and done. That's the path of least resistance. The market can always surprise us. We have some big catalysts coming up. So we've got Fed speakers speaking all week. We've got NVDA, which is supposed to be a very good report, and it probably will be. That should stir the market higher. And then we've got PCE prices. Tom Lee was out this morning saying he thinks PCE prices are going to come in under expectation. And that should trigger some good bets placed on the Fed cutting rates by the summer, at least another quarter basis point. So we'll see. All kinds of things can happen this week. It's a big week, as it always is. Almost every week we can say, man, there's all kinds of stuff that we need to discount and price in and be a little bit wary about. Every single week has challenges, which is why trading is such a fun challenge, isn't it? Just a fun way to spend the day. So come join us in the live trading room because we've got a great community. Everybody's very supportive, and you don't have to have any trading experience to join us and benefit from it. All right. So that's the map. I'm not going to be trading this map in the sense that I'm not going to be shorting if it gets up here to the top of the C wave, or shorting if it gets up here to the top of that A wave. I'm just going to let it play out, and we'll see. We're really taking this on a chart by chart basis. Now that said, let's take a quick look at the Nasdaq, and then I want to show you a handful of charts that I'm watching and focusing on. So here's your big wave 3 to the downside, right? You can always tell a wave 3 if you go down to a MACD and you find the biggest peak in the histogram, right? That's the greatest momentum, right? The greatest separation between the slow moving average and the fast moving average. When you get a big peak in MACD, either to the top of the zero line or to the bottom, you're in wave 3 territory, and everything else just kind of pales by comparison to that. So that's your big wave 3. Weak wave 4, here's wave 5, and now we're starting to get a little bit of an ABC pullback. And again, I'm not an Elliott wave theorist. I don't even really recommend using Elliott wave, but when it matches that 5-leg sequence so cleanly, then you just have to say, okay, now we're looking for an ABC pullback, an ABC relief rally leading into a new leg lower. If we go to the daily chart, let's do that. And let's see if we can pinpoint um, some places where the market, if it does print a new leg lower, where will it go, right? Where's the bottom? I need to put on a couple of moving averages here. So let's put on the, oh, I don't even have them. I had to redo my charts altogether to set it up. I set up my charts to do some day trading on the micro E-minis, and somehow my regular chart got all messed up and I had to redo it. But let me put on one moving average, SMA, moving average simple. And this is going to default to the 9 period, which we don't want. So let's move this to, let's make it real thick, first of all, so we can see it. Let's go right there. And then input, let's first look at the 50, which I think we're pretty much right there. Come on. There we go. Okay, so the blue line, right? We're just below a little bit of the 50 right now. I'm not too worried if it's a little bit below or a little bit above. It's in the vicinity of the 50 period moving average. We're also in the pink zone of an uptrending LRC. It's not just a buy yet, but this is typically a place where you do get, like here's one just below the 50, but in the pink zone where it had a nice reversal higher for about 3-4 days. Here's one that got below the LRC, reversed higher for 3 or 4 days. Here's one down in the LRC, reversed higher for several days. That's what I think we're doing right now. We're going to get a 2-3 day reversal back higher just to kind of blow off some steam, I suppose, and trap some new bears or some late bears. And then we'll get the next leg lower. And if we do get a next leg lower, then let's take a look at a different moving average. Let's go to 200. I think is going to be too far away, but let's try the 100. Not everybody uses a 100 period moving average, but that's, yeah, that looks pretty good. So right around 21,200 for the NASDAQ and right around just a little bit below 6,000. Let's get rid of all that stuff. At the bottom of the LRC, just below 6,000, just below the lows that we saw this morning, is pretty good place for the S&P to hit bottom and bounce back higher. If it gets any worse than that, then we're going to have to look at this major pivot right here, which is below 58.80 on the S&P. These are the micro E-minis, by the way. It's not the SPX. So the numbers are going to be a little different if we're looking at the actual index itself. And then over on the NASDAQ, your pivot low is right there, just below 21, just below 21,000. So that's right. That's the kind of the max downside, I think, on this. If we get any lower than that, then we're in some trouble. The market's in some trouble, right? So I don't think that's going to happen. I don't really think there's that much out there that could really upset the dominant uptrend that we've seen. We pretty much have seen this with a couple of resets. We've seen this pretty much from October 23 until this week. I don't think that uptrend is going away anytime soon. We've got, here's the thing with the government, right? The new administration coming in, they're front running all the bad stuff, right? They're front running the tariffs. They're front running the downsizing. They're front running the austerity measures that are going into place, which we need to have. We really do. We've got to bite the bullet to get this deficit down before they start putting in the good stuff. The good stuff is deregulation. The good stuff are tax relief. The good stuff are, like my governor was just out this morning saying he was going to get rid of property taxes. Now, if that catches on across the country, you're going to see all kinds of good stuff happen. So we'll see. It's all a matter of the market is always a forward discounting mechanism. So it's got to start looking very soon past the bad stuff to the good stuff, which is undoubtedly coming down the pike. Okay, let me just show you, and then I'm going to let you go. Let me show you a handful of charts. I've got them on my greens list. I don't think any of these are really tradable just yet, but they are setting up nicely. And some of these either have earnings coming up too soon, which you don't want to get into something just before earnings unless you are deliberately doing it as a short-term trade. And and some of them are still kind of in sell-off mode, so we have to wait and see on the setups for these. But let's just take a look. So we've got so this one, love. I'm interested in this because last week and the week before, during all of this this bottoming pattern down in here, my mouse is just doing weird stuff. I apologize. This little box right there, you're seeing a bottoming pattern form, right? Couple of days up, couple of days down, up, down, going sideways, building a base. You can see the volume balance down below is not horrible. It's leaning a little bit bearish, I think, but not horrible. We're getting some good greenage come in. Today, you've got an inside day green bar. You're down in the pink zone of an slightly uptrending LRC. And here's the thing. Last week and the week before, lots and lots and lots of call flow into this name, along with DAL and UAL. So for whatever reason, people are thinking the airlines, with all the problems they've been having lately, are really ready to bottom out. So here is Taiwan Semiconductor. It's not a buy, but I think it will rally on NVIDIA. We're down in the pink zone of an uptrending LRC. The 50 is not very far away. I would like to see some bullish divergence build in here. We're not there yet, but let's keep an eye on this one. Microsoft, just keep waiting for this guy to get back on track. But this is all like love, right? This is all a base building situation here. A big reversal off the lows this morning. It did test below 400. We're back up to 404. It's really got to get up above 410, which is pretty much the high of the day today, before I'm interested in buying it again. We did get stopped out of it over in the. No, did we get? No, we didn't. We got stopped out of something. Maybe it was I think we got stopped out of Microsoft over in the options room. But if it gets back up above 410 on a good volume set, then I think that's a buy. CRM has earnings this week. I wouldn't buy it again, but I do like the bullish divergence here in the momentum indicator and a couple of bounces off the lows when the market itself was falling down to the lows at the close, and a nice little potential reversal, classic reversal bar today. So classic reversal bar, say this many times, opens up within the range of the previous day, goes down south, takes out a whole long set of lows, at least 20 days of lows, and then closes back up inside the range and above the open. So we haven't gotten there yet. So let's see if it closes above the open. Google is at 180, a good round number, holding the 50-period moving average, an inside day bar. It's just that it's below the open. It's got to show me some good afternoon strength before I'm interested in that. Docu is doing this thing, right? It's been doji, hammer doji. On Friday, everything was bad, closing on the lows. And we're right now printing another potential classic reversal bar at the 50-period moving average. I like this one, just not yet. Let's wait until it turns green on better volume. So Bitcoin has been a really difficult trade because it's like testing the lows and it gets a nice little bounce and then it forms an inside day bar or green bar on pretty good volume and then it's right back down the next day. It's been a difficult hold. MicroStrategy, though, was out buying another $2 billion in Bitcoin over the weekend. And so I do think that if Bitcoin can get back on track, and it should soon, this one will do really well. We have a short on in Tesla. I'm not sure we need to take it off just yet, but I'm going to watch it. It's forming a double bottom right here with bullish divergence. You can see it that in the stochastics, and you can see it in the MACD histogram. So it could be that might be the bottom for Tesla. I did have it kind of going down to about 280 on like an inverse cup and handle pattern, but it doesn't have to do that. That might be it. They had some negative news out this morning. So lost a couple of their designers, and yeah, I don't know. We'll have to see. So Breeze is from the IBD leaderboard. It was on the leaderboard a while ago. It hasn't been on for several weeks. Gap down on, I don't know what that was, and it's been continuing down lower, but still watch this one. It's holding the 50. It's reversing nicely off the lows of the day. Let's see. PLTR. There's a lot of interest in call buyers today on this dip down to the pink zone. I understand why. I'm not sure it's ready yet. So there is some, this big high volume flush out could go all the way down to, and probably will go all the way down to about 84, 85, which would close that gap. But when you do get a couple of big heavy sell off days in a market that everybody wants to get in on a dip, then who knows? We'll just have to watch this and wait and see. That may be it. It may be it for the pullback. It doesn't have to close that gap. Not all gaps close. So let's watch this one and look for a better entry signal. It's just not giving us one just yet. But I have to say, I was watching the call flow this morning, and there's a pretty good amount of it. So there are some call buyers out there buying this one. TTD. So this one whacked on earnings. If you look at the growth of earnings per share, where are my hands? You look at the growth of earnings per share going up, 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 and then you look at price going down, down, down. There is a very big disconnect between those two things, and that doesn't usually last very long. So this is an inside day reversal bar. It's a classic reversal bar here forming today. This is a pretty good look at a potential bottom and bounce. Now, it's going to have some trouble getting up above 85 and back into that gap. That's probably a ceiling for now, but that's a very nice 12-point move on a $74 stock. That would be nicely leveraged too with some calls. And the call buyers were very active last week, and they were very active this morning. So keep an eye on that one. Snow is, I like this setup actually. I'm not exactly a buyer just yet, and we've got earnings coming up this week. So I'm not a buyer until after earnings, but I like that it is down in the pink zone of an uptrend, and it's one of the stocks I have in my long-term portfolio. I'm looking to add on a dip, and that's not a bad one right there. Bonds are good today. So look at this cup and handle, right? Here is your big cup. My mouse, I'm sorry, but here's your handle. That's as good as it's going to get. And it is showing us some good volume. Yields are pretty soft. They looked like they were going to bounce last week, and they didn't. So when it looks like it's going to bounce and they don't, that's a good sign that the yields are probably not going to get much higher anytime real soon, and that's good for bonds. We are long bonds in the room already. Someone asked about coin. So here's the thing about coin. It broke support, and you've got a couple of areas of support, but the most recent one is right there at 245. It's really more like 240, I guess. Somewhere around 240. And as long as it stays below that, it was below on Friday, it's below again. We're kind of near the lows of the day. I know it's at the bottom of an uptrending LRC in the pink zone. That's usually a good place to buy it, but you've got to pay attention to these horizontal lines of resistance because it's going to have some trouble getting up above there. Not that it can't, but of course, coin is not going to go up until Bitcoin goes up. So keep an eye on both of those, and we'll see if it can trap the bears. If this can get back up above 240, let's call it 244, it closes above 244 this week, then it might be worth throwing some money at. All right, guys, I'm going to have to let you go. I apologize for the short time together, but it is what it is. God bless everybody. Have a great rest of the afternoon. I'll be back in the live trading room after I spend some time with the option guys over in the other room. Bye for now. God bless.